get now to Wilmington Trust's Meghan Shue ahead of what could be a very big weekend in terms of trade talks with China. Meghan, what are you expecting? Because most people aren't expecting much. And if that is the case, then maybe the markets are positioned exactly right now, which is basically flat on the day, but a nice run going in.
Yeah, thanks, Melissa. I think we're definitely in a place where the market has priced a lot of the progress that we've seen in the direction of trade talks, but now it comes down to sort of the magnitude, right? We know we are de-escalating. We have a trade deal in principle with the UK. We are engaging in talks with China over the weekend. But in terms of how much we are rolling back, those tariffs and just what the magnitude of those end numbers look like is really critical, because even if we are talking about a 10% tariff as being the floor, which it's seeming increasingly likely that that is the case, I think that makes it a close call for how the economy shakes out in the year ahead. And we are still pretty pessimistic if that's where we end up. So I think the market's recovered quite a bit because we're seeing progress towards more of a tact where we would be looking at ongoing trade deals, but those take time, and we're still looking at elevated uncertainty in the meantime.
When you hear about possibly the China tariff going down to, let's say, 80% was a number that Trump threw out, 60% is a number that the Wall Street Journal cited, according to people close to the situation, it's still very high, and it still might prevent trade from China from resuming. So when you're thinking about the backdrop for stocks going into the rest of the year, does a reduction to 80% move the needle on recession odds or no recession odds?
Not really. Well, I think there's 2 points, though. One is that as we're looking at how things have manifested over the past few weeks, what was perhaps most alarming about April 2nd and the tariff announcements was that it wasn't just against China. It was against all of our trading partners, leaving businesses really no place to go, no place to pivot their supply chains. I think many businesses came into this administration expecting to have to further pivot away from China. So seeing progress with other trading partners, and we just are getting headlines that maybe there's a list of 18 to 20 trading partners who are being fast-tracked or prioritized, that is constructive because it at least gives businesses a place to go. And as far as it relates to China, I think we need to see that tariff come down quite a bit more than just to 80%. That would still be pretty significant and pretty detrimental to existing businesses, especially if that is not phased in. I think it takes the effective tariff rate for the U.S. down just a couple of percent, still at multi-decade highs.
Yeah, which sectors, you're saying fully allocated to equities? I mean, there's no telling. They could announce a deal and there could be a rip to remember in the S&P 500. Which sectors are you allocated to? Is it more the growthy side of it, the lower valuations? How would you characterize it?
It's a balance. So we're trying to balance growth and value here. For value, looking for some maybe more attractive pricing within the banks, within payment providers, and some of those sectors that typically represent value, but still having a slight overweight to technology, where you had a great segment just before. Yeah, certainly perhaps some pull forward of technology purchases from businesses, but still seeing really strong demand from AI and cloud computing, and expecting that to be the part of the market that sustainably leads us out of here. So I think it's about staying diversified, also not forgetting about international stocks, which have been more than pulling their weight this year for a change, which is nice for diversified investors.